Hello and welcome to BQ Prime. You're watching Earnings with BQ, and our guest today is Dr. Ashutosh Raghuvanshi, MD and CEO of Fortis Healthcare. Welcome to the show, sir.
Thank you. Thank you for having me.
Sir, your revenues and profits have been in line with the estimates, while the EBITDA and the margins have been slightly weaker. Could you help us understand how it's going to be going forward for the hospitals and diagnostics business?
Yes. So overall, it was a satisfying year, but the diagnostic sector has been facing some headwinds, as you're aware. Hospital sector, we saw fairly good growth, both in terms of revenue as well as in terms of EBITDA. The previous year EBITDA was about 15.8%, which is about 18.1% in this year. Having said that, the diagnostic business, there was a lot of contribution and tailwinds from COVID testing, and that since has not been around now. So that part has not grown. But the non-COVID business, even in the diagnostic side, has grown by about 12%. So we expect that the diagnostic business will also perform better in the next year. This year, the EBITDA of the diagnostic business was only 19.5%, but we expect it to be above 22% next year. Whereas the hospital business also, we have a trajectory to go towards 20%, and that will come from a variety of factors.
So, sir, on an overall basis, is it 20 to 22% that you're guiding for the year ahead?
On a consolidated basis, around 20%.
Okay. Sir, a little bit more on the diagnostic space. So a couple of the other peers in the industry have taken price rises. So have we also done something of that sort?
No, so we have not taken any price rise on the diagnostic side. However, there is a rationalization happening across the industry.
Yes.
And during the middle of the year, we would also consider a price hike.
Okay. So the overall year would benefit from the price rise increase as well?
Absolutely.
Okay.
Absolutely.
So ARPOB has been up year on year. So do we see that inching northwards even more so in the coming year? Or is it expected to be around the same range?
So the growth in ARPOB has been very encouraging for last almost about 10, 12 quarters.
Yeah.
And we expect that trend to continue.
Okay.
But slightly it will probably get sort of moderated over a period of time. But this year also we should expect at least about 5 to 6% or more growth in the ARPOB side.
Okay. And so where are we on the occupancy?
So occupancy this year, we closed with about 67%. Our earlier estimate was that we should achieve 70% by the end of the year. So it has been tad lower than that. However, the trend appears that during the coming year, we should be able to achieve 70% occupancy levels.
Okay. And sir, does it include the additional beds that we've added?
Yes, of course. Yes.
Also, any other plans that we have for the upcoming year in terms of increasing the number of beds and expanding? I believe we have a brownfield capacity expansion plan also. So how is that panning out?
So the brownfield expansion is absolutely on track. We should be adding at least about 200 beds on the brownfield capacity. We also expect to, by the end of the year, to commission our newly acquired Manesar Hospital. We are in the final stage of completing the deal. We would commission at least 150 beds there as well. If not by the end of this year, certainly in the beginning of next year.
Okay. So will that scale up take a little time, or you expect it to scale up as quickly as your other hospital projects?
We expect Manesar specifically to take up faster and ramp up quickly because it is in a micro market where we are a well-known brand. We have some synergies with our existing hospital, and this is a very rapidly growing area which is quite underserved. So we expect that this ramp up should be faster than most hospitals.
Okay. So also, I would like to ask you for an update on the government projects that we had, that we'd spoken of, that were in Jaipur and West Bengal. So how is it going on that front? Will that be taking an impact on the revenues, or did that impact the margins in the quarter, and will that also affect some bit of the margins in the upcoming quarters?
Yeah, so there are government schemes which put pressure on the pricing in the two states you mentioned, but I think that gets compensated with the volumes. So currently we are our occupancy level in these units are about 65%. We expect that to go to about 75%, because one of the advantages of the schemes is that you get more patients as well. So I think there should be no negative impact in both these places. As a matter of fact, in Kolkata, we are going to also enhance our capacity, and we're going to commission 50 new beds within next couple of months.
Okay. So what is the sort of capex outlay that we are envisaging for the year ahead?
So we're expecting to spend about 300 crores this year. Out of that, about 200 crores is maintenance, which means replacement, etc., of medical equipment, and 100 crores as growth capex. This is essentially for the existing operations. I'm not including the brownfield expansions which we are doing in this.
Okay. And so any other organic, inorganic plans in terms of newer geographies, market strategies that we're adopting?
So we are continuously looking at opportunities, but we are very clear about one thing, that our growth should be within the clusters where we are present, so that we get an advantage of synergies with our staff, with the staffing, with other resources, etc. So we would continue to focus on the geographies where we are already present. So NCR being one, Mumbai and the larger metropolitan area, and Bangalore and Kolkata are our main areas where we are looking for future growth.
And so if we had to look at the payer mix in terms of insurance, cash, and government schemes, where do we stand?
So we have about 20% on a blended average of scheme and government-related businesses. The ratios are different in different hospitals. There are certain hospitals where these numbers are very low, but as you mentioned, Jaipur specifically, and also in some of the hospitals in Punjab, we serve the ECHS patients, etc. So those populations being such, there the number of patients being treated under CGHS, ECHS is relatively high. So currently, though, it is at about 20% level, but our aim is to bring it down to about 15 to 16%.
Okay. And so we've seen a phenomenal growth on the international revenue as well. Is that expected to continue, or do we expect it to remain at current levels?
So international revenue has grown quite significantly. So currently it is at a level of about 8.6%. We expect it to improve from this. I would think that we should go to about a level of about 10 to 11% revenue contribution from international business. Because of the COVID, in between there was a dip. So it took some time for recovery of this segment, but now it is in the growth mode.
And sir, what is the mix that you're anticipating for the upcoming year in terms of diagnostics and hospitals, the revenue mix?
Yes. So diagnostic typically is contributing about 30% for our revenues, and the rest comes from hospitals.
And it is expected to remain so?
No, we expect a kind of a double-digit growth in hospitals because the base was lower last year. So we see a higher growth this year, about 19% in the hospital side. We should see that in the range of about 11 to 12% on the hospital side. And we should see a growth of about 10 to 12% on the diagnostic side as well. So the ratios are likely to remain similar.
Okay. Thank you so much for speaking to us. It was a pleasure.
Thank you so much. Thank you for having me.